right, what's up? How are you doing, Jolene?
It's post-election, and I'm wondering, like, what were some of y'all on? That's what I'm wondering.
It's been a lot that's happening. There was a lot of discussion behind that. I remember you and I having discussion about this even before we got the results of the election.
Hmm.
Um, so yeah, it's interesting to say the least. But yeah, so just as a heads up, welcome everybody to the Come Up series. This is a whole different type of vibe, probably maybe once in a lifetime, where you guys get to see us go through different topics of things outside of our normal usual things. Um, and the reason why we're doing this is because today is Tuesday, November 12th at 2:24 p.m. I am currently at UW, University of Washington Medical Hospital. My wife was having complications, and we've been here since Thursday. So hopefully, we're looking to get discharged soon. But I mean, it can take a while. My wife is feeling a little bit better, but keep us in your prayers and in your thoughts, or in just in good energy, however you see it. But yeah, I wanted to make sure that we give you guys some pretty dope information at the same time, because the Come Up Cousins, they are a family, and of course, Jolene and I, we like to keep it rocking. So, what's good, Jolene? What are we doing today?
We're doing a lot. I do want to say though, like, there is a lot going
Hmm.
on both on your in your personal life, in my personal life, and then also we have the professional life as well, business life, entrepreneur life, whatever.
Yeah,
And this every time I say let no thing stop thee, like this is what I'm talking about. The ability to show up. And especially, this is especially apropos given that we just had this election where the results are not what I wanted at
correct.
all. Um, and it's important that even though things look a hot mess,
Hmm.
figuring out like what does it mean to still show up, showing
Hmm.
up for yourself, showing up for your friends, family, and in your wider community. And so for us, this is what it looks like. It looks like taking the time to record this episode early so that we can get back to the mess, really. So,
Pretty much, you
um,
know,
yeah.
that you nailed it, or you nailed it right there in the head. It's like I said, we both go through a lot that people don't see, and I think that we make it look easy at times. But excuse my language, this shit ain't easy.
It's
um,
but
it's
I
not.
can
It's
make
not. It's not for the faint of heart. So,
yeah.
but you kind of nailed something there. So, and I have a feeling that we're gonna aim there first, which
Okay.
is starting with the other side of the mess, right?
Oh, the other side of the mess. Yes. So even though we didn't get the results we wanted, like we said, the market don't care about the elections. The market was still living life out
Yep.
here, hitting record highs. So let's just get into like the whole impact
Yep.
of these shenanigans, because these are shenanigans, y'all. That's going on right now. This is surreal.
Yeah.
But I'm not
Yeah.
going to get too much into that. But just
Yeah.
know
So
that it's wild.
so it's very wild out here, and I have a feeling it's gonna get even wilder.
Yeah.
Um, I think that, now that he's the president-elect, he's gonna have to figure out exactly like, okay, hey, is he going to work together with the Democratic Party to ultimately amend things? Or is it that essentially that there's a specific agenda that they're running off of that starts with next year? Um, and then on top of that, what does that look like? What is its economic impact? What is its social impact? There's so many things to unpack there.
Yeah.
What we were looking at when the election was going on, the futures market was very much so active.
Hmm.
And the future market, like from what I had projected, and you and I had spoke about this before, like the elections even like popped off. I said, Wall Street was pricing in that if he won and if he also took the Senate, then you're looking at about a 3 to 3.5% rise in the market. And then, of course, if Kamala had won, and alongside with, like, say, for example, maintaining the Senate, you would probably see maybe a 1.5% rise. If she took the entire, if they was a Democratic sweep, then it would have been a negative. And if Donald Trump had took the entire, like if they was a sweep, then essentially that would have been a positive, like even beyond 3.5% that Wall Street was pricing in. So it kind of was very evident from what I was seeing across multiple different sheets as it pertains to how was that the market was pricing in. But it let us know that the market was pricing in a Donald Trump victory. And we saw it play out on election night as the futures market was active. And then, of course, post-election, we saw this meteoric rise within the stock market, S&P 500, running all the way up to 6,000, and then ultimately saying, "Hold up," Dow going to 44,000 until it said, "Hold up." The Russell 2000 was ultimately at what, up 5% on day one, and now we're starting to get a little bit of hold up. Tesla going up astronomically because of the fact
Percent,
that Elon Musk, I think it was like 18% or something like that on day
it was
one.
9% today. So
Yeah. So again, it's like there's a lot that's there to unpack as it pertains to what does technically a Donald Trump presidency mean? Does that mean a presidency that is very much so accommodative towards businesses as well as or corporations as well as accommodative to the super wealthy? Probably so. And I was kind of like, having this conversation with other folks, like you got to kind of think about it in the one grasp of hope that you have as the invisible hand metric is even though that when one person societally does something out of selfish need,
mhm.
society will somehow find a way to find an equilibrium where it will ultimately balance itself. And that's ultimately what
Well,
always gives me solace as it pertains to finding that silver lining, uh, even though it may look a little rusty.
it looks rusty for real, but at the same time, it is important. If you haven't learned anything from however many years we've been on since 2020, you make money in whatever market is in
Yep.
front of you. And
Yep.
so there definitely is money to be made. I know plenty of people like when Trump was in office, um, they had some of their best market years. Um,
Hmm.
and in the market, in their business, whatever. Um, and there's always that balance between, what the human side of things is what I'm going to call it
Yep.
because
Yep.
this administration feels devoid of humanity, but the human
Yes.
side of things, and then also getting these reparations out of this market. And that's
Yep.
exactly the attitude I have on all black on for a reason. Okay. Like that is the vibe. That
I'm
is,
sorry. I couldn't
I mean,
participate.
well, you have an excuse, but you have the little black on there. I see it. You got some black and you are black. So that's enough. But you already know what time that we have to be on as a
Yep.
culture. But one of the questions I have though, so the market has been taken
Hmm.
off.
Hmm.
Uh, we're seeing record highs everywhere.
Hmm.
Can we talk about like is there a risk for a potential market correction at this
Yes.
point? You
Yes. I
know,
mean,
um,
because PE multiples are getting overstretched. I
yeah.
mean, you got some companies out there like, trading at 100 times, even some cases even further beyond that, and we're just getting stretched. And I think that when the euphoria kind of like wears off
Mhm.
from, let's say, some of the companies or some of what, well, within the market, right? Like, for example, on the day that Trump won, you saw banks go up. On the
Mhm.
day that Jerome Powell stepped forth and said, look, we're cutting rates again at 25
Yeah.
bips,
Mhm.
then ultimately you saw banks ultimately fall back down. Shout outs to JP Morgan at crossing the 240. Um, that's one that's off the list, and it seems like another one is loading. So, but yeah, so there's a lot that we're seeing here. We're seeing a lot of, like I said, we're seeing a lot of euphoria. We'll probably see a Santa Claus rally going into the market, and then also seeing potentially a correction, probably at the first half of the year in Q1.
So,
You're probably going to see some profit taking coming off the table a little bit.
well, I would hope so. I mean, at
But I
this
mean, I
rate,
think that the beautiful, but the crazy thing about it, Jolene, is though that we'll
yeah.
see this correction that may take place. I don't know how long the correction will last.
I was going to
Um,
ask you that.
yeah,
Well, really, I was
I
going
don't
to
know
ask
how long it's going to last.
how sustainable is this rally though, and like what factors could potentially derail like investor optimism?
Yeah, so one of the things that I've always learned is never underestimate the strength of a bubble.
Okay.
So there's something to be said there. We see companies trading at like, large multiples. And of course, you're going to get to a place where it's like, okay, hey, like, you know, right now we're risk on. So the market is going to accept whatever risk is coming its way. You'll probably see when the market drops, you'll probably see the dip buying will probably still remain active. You got the S&P 500, I think it's up 46% year to date. So, which is unreal. Like, when have you ever heard of the S&P 500 going up 40% in 1 year?
Mm,
Uh, it's crazy. So, like I said, it's been a lot of dip buying. I think that this probably year 2024 probably maybe even supersedes the growth of maybe even 2019, which was one of the best rally years, just within my time as an investor slash trader. So, something
okay.
to be said there. Um, though, like I said, it's like, earnings will ultimately start reeling things in, but
Mhm.
in a low interest rate environment where we see cutting of rates, the biggest thing is the question is inflation going to get sticky? Because you know
I knew you were gonna try to slip that in there.
I have a feeling, like, shout outs to Tyler the Creator, I have a feeling that it's getting sticky in here. So better find a mop. It's getting sticky. So in that regard, I think that ultimately what we'll probably see is we'll
Hmm.
probably still see the S&P 500 continue to run. I think that
Hmm.
you'll probably see some of the runners that are still running. They may get a little tired, but they're going to still keep running. I think that we'll probably see a few other players come into the space that haven't been running as much. Um, but I think that in the grand scheme of things, I think that we'll probably see a refocus as it pertains to investment. I still believe that we're in a growth phase right now.
Hmm.
So I think I had mentioned that, like, in late 2023, I said that we're going to probably start seeing companies go into a growth phase. And I think that the growth phase doesn't end in just a year. The growth phases go for about 2 to 3 years. So next year will ultimately probably solidify that whether or not we're at the end of that growth cycle, or we're in the middle to late or early late innings of that growth phase. So I tend to say let Q1 kind of like dictate the story. It'll kind of tell us.
Okay, hold on.
Yeah,
I c- my nephew is here right now, and I can hear him. He's not used to having
I can't
to.
even hear him. I can't hear him.
Okay, well, he's loud to me, so okay. But he's used to us going live later on, so he knows
Be
at five
like,
o'clock it's
better not make me get up. Don't let me get up.
right. But right now he's hella crunk, so it's just interesting. Okay, so um, let's talk about you're talking about we're still in a growth phase, right?
Hmm.
So which specific industries or companies are likely to benefit from this particular administration?
I think that you're going to definitely see tech companies that are going to benefit. I mean, I think that you're probably going to start seeing a lot of folks come through and kiss the ring and start having those meetings with Trump to kind of
Mhm.
discuss agendas and everything else in his administration. So don't be surprised when you start seeing CEOs coming to meet with, like, the Trump administration in early next year. I think that that's just naturally going to happen. And everybody has an agenda. It's really a Game of Thrones out here. um, I would probably say definitely tech. I would definitely say industrials, with an asterisk, because the
Okay.
question is can you reel back in jobs? And then on top of that, if the question of, like, mass deportations becomes an issue, I think that I'm afraid for agricultural markets. So, like, those types of arenas, I'm very afraid of those. I think energy also, I'm afraid of that one.
You say
So
afraid. What do you mean? Say more.
I'm fearful in the sense that there may not be a lot of growth in those arenas.
Okay.
Um, I just don't think that there's going to be strong drivers there. I mean, I could be wrong, but I just don't think that essentially that they're gonna. I think they're gonna fall out of love with the
Mhm.
markets. Um, yeah, so I would say, like, the two winners that I can easily see is technology and industrials. Maybe you could splash in health. And I don't know, retail is more so economic space. So essentially, if people are losing their jobs and everything else, they're going to start spending less. Um,
Make
And
remind me to circle back to
I was
retail.
I was going to actually talk about it a little bit because of the fact that what we're seeing as it pertains to a lot of companies right now,
Mhm,
if they're expecting large tariffs or increased tariffs, then you're seeing a lot of companies that are buying up inventory now, so that way they can protect themselves for at least next year.
mhm.
And then from there, essentially trying to like figure out like, okay, hey, since we did all this massive capex spending, where are we going to have to cut? Are we going to have to? Is this going to turn to layoffs? What is that going to look like? So again, it's you're going to see a lot of companies that are taking the necessary precautions, and the
Mhm.
companies that that have spending power and everything else, they're not going to really care because of the fact that they're participants within that market, but they also help dictate the market. There's a difference.
So, question then. So, speaking of dictating the market in the economy, but looking on the consumer side of things, um, word on these TikTok streets is that people are gathering
Hmm.
together collectively to
Hmm.
in a form of like economic resistance um,
Hmm.
to combat and resist this new
Yep.
administration.
Yep.
So, what does it look like? Maybe we can just think about this for a moment. What would it look like for all the people that voted for Kamala Harris
Hmm.
to not really participate in the market at large? So I'm talking about shifting dollars to Black-owned businesses, local businesses, small businesses, maybe doing some bartering, and essentially boycotting those larger corporations that supported or contributed to Old Boy's campaign.
I mean, I get it. And in certain lights,
Mhm,
yeah. I mean, I can definitely see it, like from, say, for example, consumer to business. But then it
mhm,
gets a little bit tricky when you start thinking about it from like the supply chain of things.
yeah.
So when you're going from, let's say, um, if I'm going from, let's say, the business side of things, if I'm a business owner, and then now I got to worry about like supply of whatever it is that I'm buying. And then let's say if I have to get that supply from out of the country or whatever it is, then what does that look like for me now?
Mhm,
Now it's like I'm now the impact, like on a microeconomic side, lovely. When it starts having an impact where that business or whoever they are within the ranks, they now have to participate within the macro environment. That's where it gets tricky. Now, it's not to say that it can't happen. I think that the opportunities that people should start looking at is banding together to probably put together private equity
mhm,
or investment funds in which that ultimately literally go towards making the necessary investment for growth of those small businesses. I think that ultimately utilizing as it pertains to even in places of real estate for folks that are multifamily, as it pertains to the specific focus, as it pertains to where those dollars go. Also participating on a legislative level within their own state or cities, preferably state. Is really going to come down to those types of things because when you look at state is going to dictate what happens to those businesses regardless. It's going to happen. I mean, you have to think about like the journey of money, right? From your hands to wherever it goes. So, for example, if it goes from my hands and then it goes to that small business's hands, and then from that small business is going to go to whether or not who their suppliers are, and then of course there's banking that's intertwined into this as well. But let's just say like you're going down the road as it pertains to like where does the money go? If we're really like thinking about this, then that would mean that we would have to literally control the entire ecosystem as it pertains to supply chain and also delivery as it pertains to the consumer. If we can do that, then great, fantastic. If we can't, then essentially we see cracks in the armor as it pertains to like, okay, hey, how does one, the money circulate? Then two, how is it that we can influence growth? And then three,
mhm,
it's like kind of like the concept of like where it's like you have law enforcement that participates or that they serve within a community, but they don't live within that community. So those dollars
right,
go outside of the community and
mhm,
essentially the dollars aren't circulating. So I think that that's the biggest part. Like the collective works and economics, I think that it's very possible. Even in 2024, I think that people say it's tougher. I don't think that it is. I think that it's more so easier, especially given the technology and everything else.
Mm-hmm.
And I think it's just more so in a sense of mindset. Can it happen? Can we circulate those
The money.
dollars?
So the key part is like how many times that we'll just use a dollar. The dollar is
Hmm.
circulated within the community before it leaves the community.
Correct. That's going to be the major question. Like, for example, if you know a person who's a farmer, right? Okay,
Mhm,
well, where does he get his feed from? Like who supplies him as it pertains to the feed? And then the
mhm,
person that's literally producing the feed, like, what does that look like for them? Like, sooner or
mhm,
later, you're gonna find a way where you're gonna tap the global economic environment or the macro environment. It's There's no way that you can probably escape it unless we go like kind of like back into times as it pertains to how those things ultimately operated. Like if you think about people who buy clothes, like what does that look like as it pertains to circulating? So again, it's not to say that it's not doable. It's just the thing is that you have to get very laser focused. Your
mhm,
network has to be very, very strong in the sense that okay, hey, who's supplying what within the supply chain, and
mhm.
then ultimately, how do those dollars circulate accordingly?
Even even if I mean, because I imagine right now, given how things are and who owns what,
Hmm.
and I'm speaking specifically about the Black community, that dollar does not stay in our community that long. So
Mm-mm,
even if we
mm-mm.
increased it by 1 to 2 cycles of staying within the community, um, that
That
could
has
be
an impact.
a major impact.
That has impact. I mean,
Okay.
because you think about those tax dollars then
Mhm.
go into the communities in which that they're serving, like for example, education, health, and all those other types of things. I mean, luckily we live in Washington State, and Washington State is very lit, so it kind of allows us to. It kind of gives us solace where we can kind of like live within a bubble. If you were in a blue state and you voted blue, then essentially you're in a bubble. You're good to a certain extent.
Mhm.
But if you live in a red state and you voted blue, man, I feel for you. I really, really do. And you find yourself having to ask yourself questions as it pertains to what does that look like for you? I guess the biggest thing is make money and then do something with that money that has a huge impact on your community.
Yeah, that's probably some of the best advice. And how could we not forget? We're talking about like major impacts and all that. The big
Hmm.
old elephant that stomped all in the room and took over is freaking Bitcoin.
Oh, I mean, I think that ultimately that just came along with the like Bitcoin is its meteoric rise in the short
Mhm,
term that is done. I think it's like 30% or something like that.
mhm,
Um, I think that its meteoric rise is the fact that I think the writing's on the wall now that the president elect is Donald Trump, and ultimately I think that Gary Gensler's days are over or numbered at the SEC. And if that's the case, the number one issue, like I think Lena Khan and Gary Gensler, I think their time is up at FTC and for the FTC, they're not my FTC. Just as a heads up.
right, yeah.
Um,
Federal Trade
yeah,
Commission.
yeah, yeah. Federal Trade Commission, not from the culture. Um, and then of course SEC
Mhm,
as it pertains to Bitcoin regulation. So I think that its massive pop is on speculation that essentially that Gary Gensler is out, and ultimately that you will be replaced with somebody who's much more accommodative towards allowing Bitcoin or cryptocurrency into the landscape and removing some of those regulatory guidelines and maybe even
mhm.
writing some new ones that are more accommodative for businesses to flow, and also maybe for trade as well as it pertains to investment. So I think that that's the reason why you saw that Bitcoin rose.
Okay.
It's a good temperature reading as it pertains to sentiment for sure.
Well, yeah, the sentiment is interesting because there's like political sentiment and then
Yep.
there's the economic and market sentiment.
Hmm.
Um, yeah, I'm gonna keep my eye on inflation in this
That that's
administration.
going to be the. So can I make a prediction here?
Yes.
I think it's going to take 3 years
Mhm,
for people to probably witness that things probably start to get ugly. The people who are really paying attention on the
mhm.
economic side, just purely
Well,
economics,
economics, yeah.
I think that with all this accommodativeness and with all this like easy money policy and all this other stuff that's probably about to hit the streets, and we just got out of like this massive hole as it pertains to what inflation caused and its impacts.
Mhm.
I think that like it's kind of like crazy because when you really look at Joe Biden's economy, as much as we like to give him stuff about like, sending money to Ukraine and all these other places, if you really look at the economy itself, the economy is actually doing good. I mean,
Yeah.
it's slowing down, don't get me wrong. I mean, there's
Mhm.
certain things that there's certain times where it's like it becomes out of your control. But in Biden's economy, as it pertains to presidency, he's actually done very, very well to position it for the handoff. Now, the question is, how long is it going to take for that to literally fall apart? Like, that's going to be the question, or will it fall apart? You know, those are questions that we don't know. But in my estimation, I'm
Mhm.
probably guessing that we will probably see inflation come back uglier within 3 years. And my
Okay.
reasoning behind that is because of the fact that one, you're going to increase, say, for example, production here in the United States. United States talent will cost more than what you typically pay for it to be produced out of the country. I'm not saying like I don't have a stick in this fight one way or another. I see the balances for both arguments. I'm just reading the tea leaves as it
Yeah.
pertains to what it looks like. So when the cost of something goes up, then, or when the cost of labor goes up as it pertains to produce things, then the cost to sell. So, for example, simple thing to say, if I create the shirt and I sell it to you, Jolene, for $10, how much are you going to sell it for? How much are you going to sell it to your customers?
For about $50.
Okay, so wow. Okay, so let's make it even more simpler. Let's just
Listen,
say that you sell it.
I gotta get my lip back.
Let's say that you sell it for $15. Just I'm
Okay.
basic. Let's just do
Mhm.
basic math. But let's say that I raise the price to $15. Now, how much are you going to
Mhm.
sell it to your customers for?
Well, now I have to sell it for even more because you're charging me more. So every
So,
time, if you keep charging me more, I'm gonna have to charge the customers more. It's
and
gonna
that's
get
what the
passed
tariffs.
off. Right,
And I
that's the
just
tariff.
explained. I just explained the Trump tariffs to anybody out there that didn't understand
Mhm.
what that concept looks like. So when you think about all of what that price structure looks like, so then that's going to drive inflation as it pertains to the cost of goods and stuff like that. And then on top of that, if you're taking away, even though they're skilled workers, but you pay them less, and you talk about mass deportation, well, who's going to fulfill those roles? Who's going to work those jobs at those price points? Because a lot of Americans, especially younger Americans, they've kind of like been spoiled and like for X amount of time to say, okay, hey, you can make this much amount of money. Well, what happens now? Like, what does that look like now? So now the cost of those goods now go up because of the fact is you're going to have to raise the pay in order to have those types of workers that come in and pay them at their rates versus paying for the rates that you pay in Mexico, China, Vietnam, and I'll even throw in some areas like, for example, India. So, for example, when people ask me, well, Mark, why India? If you think about it, software engineer that you pay for, like a lot of these companies, they get away with paying software engineers in India. They're probably paying them anywhere from $30,000 to $60,000, what they would typically pay somebody here back at home, anywhere from 120 to 150. I know that's a
Mhm.
huge thumbs down for like, for example, what that situation looks like. But I mean, it's true. You can't escape these things. And, we can be mad at the truth, but no matter what, the truth is still the truth. And so that's what I mean by where I say that inflation is going to probably come back and become uglier.
Well, okay, so what's interesting too is all of the policies that this upcoming administration are trying to implement, the ripple, they don't talk about like the fuller scale of what the impact's going to be. Like if we just stick with immigration and you're talking about if there are mass deportations, then it's going to essentially drive the cost of goods up because now we have to pay for more expensive labor.
Hmm.
And there's no one that's going to do those jobs that the immigrants were doing, right?
Hmm.
Um, I'm also wondering what the impact will be on people's marriages, for example. So, like with economics, one of the number
Hmm.
one reasons for,
Why people get married is because it's a wealth builder.
right, but now if they're you don't like your job
Hmm.
is causing pressure, stuff is high, you can't afford it, there's less harmony in the homes, and also they're talking about getting rid of no fault divorce.
Hmm.
So let me just say, for those of y'all who were even thinking about it, I mean, this might be the time. This might be the time right now, because otherwise you might be trapped. You might be trapped
You are.
in not even just an unhappy marriage, but it might be a financial disaster for you to stay. So it's just interesting how all of a sudden we have this election and
Hmm.
2025, like everything might just change. Like the whole script will be flipped. And the reason why it is so important to just take that time right now and to think through what each of these things mean that we're going over,
Hmm.
it can make the difference in how you move, how what your mindset is, like what you're thinking, who do you lock arms with, all these things. It literally feels like the world has been
Flipped
like,
upside down.
yes, it really feels like that right now.
Yeah, and the one thing that kind of like gives me solace is
Mhm.
the day is always darkest before the dawn, and so I look at it like this. Um, a few things. So
Mhm.
let's because that's a lot to unpack. That's a lot to unpack. Um, so let's look at it from the stance as it pertains to, just I'm always gonna like try to steer clear of like, my personal, feelings. I always will try to like bring it back into the center as it pertains to what can the data tell me and
Mhm.
those types of things. And so here's what I'm noticing, and here's what and because I've had a great deal of conversations across multiple different sides of the pond, whether you're a Trump supporter, Kamala supporter, and or even Jill Stein or Cornel
Mhm.
West. And what I found out is that a lot of folks, when they think about things, not even just voting, but just people today,
Mhm.
it's kind of like microwave. Like everybody's thinking more so microwave versus slow cook versus oven.
Mhm.
You make it a little bit of stovetop. And so, what does that mean when I say that? The type of data that people are bringing in, like
Mhm.
what people are talking about, the conversations. Like, I remember back when we first started the Come Up series, people could probably only put together maybe 5 sentences as it pertains to the market. Now they can give you a full fledged thesis.
Mhm.
And the reason why is because of the fact that they're just not listening to a sound bite. You're actually listening to the entire thing. And that's one of the things that I would probably strongly challenge if we have Gen Zers watching. If you're watching today and you're paying attention, your generation, you know, there's a lot of things about your generation that is cooked. But I mean, let's be honest, like
Mhm.
dating and everything else for your generation is cooked. And I think the reason why is because there's been a lot of unrealistic expectations that have been placed that
Mhm.
like, and it's like, it's kind of like funny because I kind of like welcome a recession to a certain point because it gives everybody a mental room. It
Mhm.
gives everybody a mental reset, like where we can truly reset the room. Um, and ultimately people can start getting back to a little bit of what we call reality instead of just like listening to a soundbite or hearing this. And I think that honestly, TikTok serves a great purpose, but then it's like, okay, hey, go beyond TikTok, go beyond and actually do further research, go and actually read the full article, go ahead and read the entire data point. Don't just listen to like, and it's very simple, like where we listen when people debate about things, Jolene, they debate
Mhm.
based upon like, okay, hey, I'm looking to pick a certain point out of
Exactly.
what a person said versus listening to the entirety of what the person said.
For
And that just
understanding,
shows you this. Say that again.
listening for understanding as opposed to just listening to, reply and respond and
And that's the
react.
crazy part because when we get to that point when we listen to like literally learn and everything else, then the conversations and everything else is so much more richer. Versus what we're doing now is we now find ourselves arguing and debating and voting and whatever it is against our own interests and not even realizing it at the time because of the fact that
Well,
we're
some
so
of us.
microwave.
Some.
I'm just saying as it pertains to the mass
Yeah.
population. I
Mhm.
mean, they not like us. Um, so I think that's the thing that like, when we think about it, like when people want to breathe this like, quote unquote rarefied air, I mean, people like they listen, they read, they
Mhm.
actually read to understand, they listen to understand. They listen to find like, okay, hey, data points that they can ultimately extrapolate and also expound upon. And that's the same thing as it pertains to market. That's the same thing as it pertains to economics. It's universal. It's universal. One of the things that I've always learned from some of the most successful people is they're great listeners.
Mm.
They're exceptional listeners. They rather sit back and listen to what is it that you have to say, and also to like literally take it all in. And then essentially, if you typically notice, like some of the most powerful people, they listen a lot, and when they respond, their responses are very short.
You got
So,
3 minutes. No, I'm just kidding.
right, like, but it's like their responses,
Mm-hmm.
they hit, like
Mm-hmm.
they hit, and they didn't have to say much. So I guess that's the thing to look at it, like Jolene, like really, if Gen Z is watching today, or Gen A, or even my generation as millennials and Gen Xers, every generation, listen to understand. I think that we're missing that huge dimensional piece where it's like generations are not having conversations with one another. And that's a major decrease in wealth because of the fact that you're missing a lot of the scope as it pertains to the conversation. You're missing those parts as it pertains to context. The reason why I value my grandfather a lot is because of the fact that he fills in a lot of the context that essentially I just wouldn't have been able to grasp on my own.
Mm-hmm.
So there's just, like I said, there's just data in which that we gather, in which that we would just ultimately be missing. So I challenge you, like literally go have conversations, and then, let's move beyond our own triggers. Like we have to have non-triggered conversations.
Well, I mean,
Like,
folks need to do some healing, honestly. And we've talked
yes,
about this. They're,
we
they
did.
we all need to do healing. I'm not just saying, I'm not excluding us. I'm saying everyone does, but
Yeah,
we have to be able to tell the truth
we do. And I
and
think that
stand in it.
there you go. I was going to say, we have to be able to hear the truth,
Mm-hmm.
listen to the truth, and also be able to stand in the truth, and then also deal with it. Like, okay, where do we go from here? So
Mm-hmm.
now that we know that, okay, hey, that this is what it is, the markets have kind of like accepted it.
Yeah.
The markets are now trying to grasp, like,
Yeah.
it's kind of like when we see the Fed do its thing. The
Mm-hmm.
markets were trying to grasp it. They kept trying to create this whole narrative around Jerome Powell, and Jerome Powell was like, no, this is what it is. And then the
Mm-hmm.
markets ultimately had to go through its tantrum, and it had to get with the program. And think about it. Look at where we are now. S&P 500 now at record highs, and like now, no, you don't see anybody speaking negatively or speaking against Jerome Powell's name. Now it's like they put respect on this man's name and be like, "Look, I wasn't familiar with your game. Now I am. So ultimately, let me respect it." And I think that that's a major example that I think that we can pull from and say, okay, as we move forward, let's look towards like what we've learned in the past
Mm-hmm.
to apply it towards not only the today's present, but preparing us for the future, and not like just stay focused on what's currently happening, but look at the things in which that are currently happening and looking at it in the sense of beyond 4 years. Let's say, okay, hey, think about it 8 years, 10 years down the road. What does that look like? How do we get there?
Yeah. There were a couple of other things that were impacted by the election and election results. For one, the US dollar.
Yep.
Um, how should we take that into consideration as we think through next moves and just the impact of the economy and impact on our portfolios?
I mean, strong US dollar ultimately creates risk for equities. I mean, a weaker dollar creates a better opportunity for equities for folks that are investing outside.
Mm-hmm.
But at the same token, you got to look around and say, okay, hey, well, it's like you walk into a restaurant, and let's say that you're in a restaurant, you see all the menu. Like, imagine going into a restaurant and seeing the entire menu on display. So that way you know what you're getting. Okay, now that you see the entire menu, now you have to ask yourself, what is it that I want?
Mm-hmm.
And you're going to see certain things at a table, like, I ain't messing with that.
Yeah.
You're going to see certain things at another table, like, seems a little too risky, don't want to risk it. And then you're going to look to other things that are going to be like, okay, this is Old Faithful. Like, it doesn't seem
Mm-hmm.
as much high as a risk. I mean, and then of course make your decision. And I think that that's the same way that we look at it as it pertains to like U.S. dollar. Like, what looks attractive? If energy isn't going to be attractive, if let's say industrials are going to somewhat look attractive, but also at the same token risky because of the fact of potential layoffs and costs of things, increasing. Again, what does that look like for, what does that look like for the everyday person? Like, we don't know. Like, those are the
Yeah.
things in which that we just honestly don't know. Um, looking at, like, for example, the currencies to pay attention to is, I don't think that people really pay attention to the Chinese dollar, though that they should. Uh, they should pay attention to the won, the euro, the pound, and of course, I'm drawing a blank. I'm drawing a blank, but the
Yen.
countries that you should pay, yeah, yen,
Mm-hmm.
yuan,
Mm-hmm.
euro, US dollar, and the pound. Those are the five that you should pay attention to. And ultimately, you can see that the currencies are a direct correlation as it pertains to what's happening within their economies or lack thereof.
Right. That makes sense. That makes all the sense in the world. Like you always tell us to pay attention to the tenure.
Hmm.
So now given like what's been happening post market, the treasury yields have increased. So
Hmm.
what implications does this have for, I don't know, if you're investing in bonds or
So people are selling off bonds. They're selling off bonds and saying, okay, hey, well, that's why I said people, when they go to bonds, and they're risk
Mhm,
off. When you go to bonds, when the yields are down, then that means
mhm,
that essentially that, okay, hey, people are buying. You have a lot of buyers activity. When the yields are up, then that means that essentially that there's a lot of sellers activity. So I haven't looked at it lately today, but I mean, I can pull it up real quick. 10 years currently sitting at 4.4. So that lets you know that there's a lot of risk appetite out there, and essentially letting you know that we're more so stepping into a risk on environment. But at the same token, inflation slightly still lingering, but not fully like healed. Then on top
mhm,
of that, recession potentially around the markets because of the fact that we're inducing ourselves there, because of the fact that we're seeing activity that, um, like we're seeing activity, like for example, things to pay attention to, lower taxes, and let's say that even if you had countries paying for tariffs, right, that
mhm.
still wouldn't cover the loss of revenue. So, like
Yeah.
again, that will drive up inflation. That will drive up inflation. Um, and again, it's like that's what the U.S. economy cares about. The people of the United States care about, like, okay, hey, are groceries too expensive? Is gas too expensive? Um, is my living costs too expensive? Those types of things. Is my job safe? What
Mhm.
does that look like going into 2025? But not only just going into 2025, what does it look like coming out of 2028, going into 2029? What will the like? That's the thing that, like, honestly, the smart money is asking, what will I have, and what will things look like in 2029? That's the way that you should start formulating your strategy. Because, like I
Lord.
said, the next 3 years, you kind of know where we're going with this. You have an idea as it pertains to, like, who's behind the wheel. You know how they drive. You've seen how they
A
drive
wild
before.
banshee.
Listen, it's like catching that Uber driver that you once had, and you were like, okay, whether it was lit or it was a terrible experience, up to you, but just for your own imagery. Now you're walking into a situation now where you're just like, okay, hey, I get this same Uber driver again. Well, you kind of know what you're in for now.
Mhm.
Um, so I mean, just to keep it in perspective, let's bring it back to data. So again, like I said, lower taxes will not, like tariffs will, even if another country pays for it, will not cover the bill for lower taxes. So that's going to be something that the administration is going to have to tackle. And if they can tackle it within 3 to 4 years, within 3 years, you will probably feel the effects of it.
Okay.
Um, and then, other issues as it pertains to, like, if it's less regulation, less regulatory. Yeah, everybody sees that markets go up, but at the same token, there's the other side of that. Like, loss of regulation means that essentially we're not looking at things as closely. So what
Right.
does that look like?
It looks
Um,
I know what it looks like.
yeah. So, and again, it's like, okay, loss of immigrants that were either in the process or that were DACA, whatever it is, and ultimately they were taking on jobs in which that were, like, literally benefiting the U.S. economy. Like, people need to think about it. Like, you lose these workers, this goes up against your own interest because of the fact that they keep your economy running. unless you already have folks that can literally step in and just replace those individuals within the economy, then where does that leave you? So those are questions that literally need to be answered. I don't think that we can answer them all in one show, but um, I think that right now where it stands is the stock market is saying risk on, at least for the
Mm-hmm.
next year. The stock market is looking at risk, and ultimately people are saying though their prices are high, I believe that if I buy it this high, it may go higher, or I expect it to go higher.
Okay.
So again, I think that that's kind of like the walking expectation. But like I said, if you want my playbook, here's my playbook for going into now that we have some data points. Unless the bull market is showing you that it's broken, then the bull market is still the bull market. The bull market is still a bull market until it shows you that it's lost its pattern.
Mm-hmm.
That's the first thing. Don't believe me? Go watch people like Corey from the Stocks channel and other people. I know that PW does also great analysis also. And also Zay does great analysis as well as like people like Lawrence. So you have that. Then on top of that, you also have the fact that current sentiment within the marketplace right now says that, okay, hey, well, what is the alternative? If I'm making, let's say, if I have the opportunity to make anywhere from 10 to roughly 35% gain in my portfolio as it pertains to the equities, why would I want to run to treasuries?
Right. Okay.
If companies are in growth and they're telling us that they're in growth and they're in growth phase and they're spending the money, and like, look, they're not even like timidly telling you that they're spending the money. They're like, yeah, we're spending the money.
Like we got it and we spent it.
Listen,
Okay.
at the end of the day, nobody's gonna nobody's really batting an eye. Everybody's kind of like gonna start reading from everybody's homework, and we've seen how Wall Street does. It's a very much so monkey see, monkey do market, and
Mm-hmm.
so essentially, like they're all looking at each other's homework and saying, "Well, what answer did you write?" Well, well, I wrote this. Well, some firms will say, "I will try to one up you on this one," and others will be like, "Okay, hey, like I want to see the folks that are the canary in the coal mine, where it's just like, okay, like." Everybody else is giving me this analysis, but where are the folks that are standing up against the market? I want to know what their thesis is. The folks that stand up against the market that currently exists, what is their thesis right now?
Okay.
Valuations are overstretched.
Mm-hmm.
Okay, what else?
Yeah. What's next? What else do you have?
Yeah,
All right. Well, it's always weird when we do the show this way because I'm so used
yeah,
to, the interaction of the cousins and everything. But
fact.
like with the
And I know
chat.
that this wasn't my finest hour, y'all. Like, mind you, I'm probably maybe operating off of maybe 6 hours of sleep. So again, it's like I may I may have to come out and pop out and show people, possibly next week or something like that, where I probably have a conversation and we probably have a Twitter Spaces or something like that, or finding another platform where we have this conversation because Twitter is getting a little bit too dark for me. Um, but yeah, so I definitely believe that if like I said, to focus on the playbook, focus on the winners, focus on the market in which that they're playing in, and ask yourself: is their market going to significantly change?
Right.
One president doesn't make the entire market. These companies are way bigger. Like if we really put it into perspective, these companies are more powerful. If you combine them, they're more powerful than the U.S. government. How do you know that? Let them fail.
Mm-hmm.
Let them fail. Like, what would happen to the U.S. economy if Microsoft, Apple, Google, Tesla, Amazon, Nvidia, what if they all came crashing down and lost 50% of their value? What if, say, for example, all of a sudden they couldn't do, what if they just all had to, like, they couldn't do business for, like, what if they had to stop doing business for 3 weeks?
That would be wild.
So that's what I'm saying. It's like you have to think about like the power of some of these companies. Like we saw it before with the banks, right? If
Mm-hmm.
banks shut down,
Bail them
like
out.
imagine JP Morgan going dark for 40, let's say imagine JP Morgan going dark for 72 hours.
Yeah, nah.
That's a company that moves $10 trillion a day.
Yeah, it would. No thanks.
Yeah. So
Thanks.
that's why I said it's like, don't just say focus on just who's sitting in an Oval Office in
Hmm.
some old real estate. You know, like focus on essentially like, okay, hey, who are the real power players here?
Hmm.
Like, and what are they doing? What are they saying? What are their
Back on
conversations?
there. Okay.
Yeah, like because if they're still spending and everything else, if they're still investing, if they're still like, look, pay attention to M&A activity. You're about to see a lot of companies starting in, yeah, you're about to see a lot of companies
Mhm.
possibly get gobbled up starting in 2025.
All right, we got to pay attention to that. All right. Well, you know what? I think we need to get back to our personal lives now.
We do. Just want to send a special shout out to my wife, Erica, who will probably be watching this later. She watches every single one of our episodes faithfully. I love you. I hope that you feel better. I'm always by your side. It's been tough, but you're a trooper. You're a warrior, and you'll get through this. And shout out to all the folks that just gave us great wishes,
Mhm.
prayers, and everything else. We truly, truly appreciate it. Um, like I said, I'm human. So a lot of times people look at me as if, nothing can hurt me. Trust me, there's things in which that can hurt me, and there's days in which that I have weak points. And, honestly, I make it seem easy, but it's not easy. And so just thank you. I just want to say thank you to everybody who's just in our corner, and also just like supporting us in this endeavor, even if it's just, hey, Mark, I hope all is well. You don't realize how well that like literally just fuels me to keep going, even though I'm running off of fumes right now. Jolene, I hope you have a wonderful week.
I will. I'm going to Afrotech, so I will have a wonderful week.
Oh, nice, 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 nice. Well, I hope that you meet a few cousins there at the event. I hope that, deals are made and everything else. Put on your nice VC hat, represent FTC well. And I will talk to you probably when Afrotech is over. To all the folks out there, look, don't let fear run your decisions. It's okay
Right.
to be fearful, but if you're fearful, step back and examine, and go talk to someone. Then come back with a little bit more of a clear head. Um, you know, we've experienced a Trump presidency before. Some of the things were good, some of the things were bad. I hate to say that I'm actually speaking in his words, but I mean, how fitting. But again, stay focused towards the future, y'all. Stay focused on the future. Stay vigilant as it pertains to helping mold and shape that future. Even though that you may not have gotten the decision that you wanted or whatever it is, and you may have, and that's fine. But again, whether you got the decision that you wanted or the decision that you didn't want, that's okay. Just stay focused towards what is it that you can build and what is it that you can control and what is it that you can invest in.
Hmm.
Um, there's no point in focusing on things that you have no control over and that you can't have, because if you focus on the things that you can't control, you'll have a very minimal impact. But focus on the things that you can, you won't believe how many lives you've inspired, impacted, saved versus the folks in whom which that you could have left at the wayside by just focusing on things that didn't matter or that you couldn't have an impact on. So that's the best case advice that I can give people. But let's move forward, one step forward.
Yep. Onward and upward.
All right.
Right.
Until next time, I'm Mark Monroe.
I'm Jolene GC, and the place to be.
We didn't get the other the
No, there is
it,
no.
it's not that kind of a week. We'll save it for live. Until then, y'all, we'll see y'all in 2 weeks. And be safe out there, keep investing, keep your thesis strong. Peace, y'all.